Welcome, everybody. Thanks for being with us today and joining in. As you have seen regularly, I've been in Park City a lot. I'm in New York City now. Happy to be back. Some of you have seen this presentation prior, and we're glad to have Jim and Joe did it. Joe Gissy did it prior. Full disclosure, Jim and I have known each other for, I don't know, 15 years, something like that.
Actually, I think we met in 2008 or 9, so a little longer than that. Yeah.
Longer than that. And
Yeah.
so I didn't even know. It turns out there was a huge pleasure and joy to find out that Jim had joined Tactive, and so this is super great for me. The other thing, full disclosure, I have an interest in the success of this company, not in the sort of traditional success fee way, as also is usually not the case. I'm not, if you invest, I'm not participating as a placement agent or anything like that. I'm just a shareholder like everybody else. And that's what this is all about today. We're raising money for Tactive. Super interesting idea. It has a lot of the elements of some of my background, having been involved in a couple of financial services roll-ups and tech platforms. And I think the best way to describe this, although I might get yelled at by Jim, is WealthTech. But you'll discover more as we go along here. As you know, we can't hear or see you, but we are know you're there. And we would encourage you to ask questions as they come to mind. And please do post them as they come to mind, because we have a lot of people coming on. I want to get to as many of your questions as possible, so you don't have to wait. If they come to mind, just put them in the Q&A or the chat box. Also, we're going to be recording this and posting it on the Family Office YouTube channel, and most likely somewhere on the Tactive website. So if you want to view it again or share it with others that you know, please feel free to do so. And we'll also, as usual, make sure that we put everybody in touch with Joe and Jim here. And I see my friend Don, who's responsible for all of this. So welcome, Don. Thanks for being there. And thanks for doing this with us. So super excited to have you guys again. Lots of progress has been made since, I don't know, 2-3 months ago. We've been working in the background trying to make the folks who would benefit from investing in this company aware of its opportunity and making good progress. So with that, Jim, so good to see you as usual. And we're going to have a cocktail at some point here in person.
Yeah.
So, yeah.
Well, you know, as I look out right now, it'd be a hottie toddy because we're getting in the middle of a snowstorm. So, but welcome everybody. Appreciate your attendance and you know, taking the time out to hear the presentation. Excited to do this, and I'm hoping that we get questions throughout, because I'd much prefer, you know, some interaction and being able to expand beyond just what's, you know, on the slides and presentation. I guess Art, looks like we're you know, kind of filled up or close to it. So I'll just
yeah, go ahead.
Yeah, I'll give some of my background and then you know, try to keep this concise so I don't take up the whole hour. But you know, this isn't you know, my first attempt at building out a platform like this. And you know, briefly, you know, I practiced law for a little while, commercial transactions, and then early on moved on to financial services career, built a pretty successful RIA practice, 91 to March of 97, got it to about $800 million. Helped Fidelity form their advisory board, was on that for pretty much that entire time. And then moved to a company called CBiz, did a roll-up of wealth management and RIA TPAs. There, I think Don Goodman is on the phone or on the presentation, introduced me to a gentleman that had a really interesting idea, was able to take that idea, raise a significant amount of capital for it, and launched that. And that it was originally called Statement One. It became Allbridge Solutions. If you're familiar with that, you know, it's an institutional level data aggregation At the time we did that, nobody was able to actually to create that type of enterprise with that much data flowing through it. It's now owned by Mellon Pershing, so very successful company. At CBiz, I did over 20, or was part of 20 acquisitions. So again, very deep background in being an advisor, working with advisors, helping them solve problems that they run into. And that's really the genesis of what a platform should be. From there, did a number of different things, ran institutional division for Old Mutual. It's about $300 billion in AUM within those companies. And probably the thing that would be most notable here for everybody to understand are two enterprises. Folio FN was an online broker or brokerage operation when I came in. I came in as president and built out what most people heard of or know in the industry as Folio FN Institutional, which is now owned by Goldman. And from there, went to Jackson National and created a company called Curian Capital. And Curian was an extremely innovative TAMP platform that eventually got to $24 billion. So again, little different model than what we have today and how it was distributed, but essentially all the same pieces, parts that you need to have a successful platform were established. And I was employee one, hired 120 people in a year to kick that company off. So happy to go into that. But the last 13 years I spent as president of a family office. And the initial business model there was to take a large amount of liquid capital and invest it in emerging hedge fund managers. And we did that very successfully, seeded 11, you could count 13 if you wanted to count feeders and different things that we did, strategies. And we had a risk monitoring group and a distribution team that would take those strategies we seeded and then grow them and distribute primarily North America and Europe and a few investors in Asia. So pretty steeped in the different structures to go along with private investing. Did a lot of private equity as part of that, and also started a mutual fund company with the premise that was, we didn't want to be in the style boxes at Morningstar. We did all specialty asset class and what most people refer to as liquid hedge funds, and that got to about $1.5 billion at its peak when I exited, and was introduced to Tactive, and have been working with Joe and the team now for about 6 months. So with that, I'll get into the presentation. As Art said earlier, WealthTech is the space that we occupy, and we're doing things in a creative, not at the edge of the table type thing, but in a creative way of taking institutionalized asset management and applying that to an overused word, democratizing that for individual investments. So WealthTech space for active investing. So, what is that, and what is a TAMP? If you haven't heard of a TAMP before, third-party asset management platform, that's just a piece of the business. What we really need to build, and what is kind of the pursuit right now, is a fully integrated platform for financial products and services. And if we do that successfully, help the advisors make their lives easier and give them better products and resources, it's going to help people enrich their lives, their clients, and ultimately our clients. And as I go through this, there's going to be I'm going to go fast forward. If anybody wants me to go back, I'm happy to. But if you look at the landscape today of what's out there in the financial services space, there is every day a new company coming on board that does some piece of it. And this slide represents, kind of that horizon. It's a very confusing, space to be in. And, all these different entities could be integrated. Part of our job is to work through this, cut through the noise, find the right partners to integrate with, create the things that we think we can do better on our own, and offer that in an efficient way to our advisors. And most advisors, even larger, $1 billion plus firms, would have a tremendous difficulty integrating and working through this entire landscape. So where are we today as far as Tactive? So 2021 was really kind of a test phase. Small amount of money, $8 million to work through the bugs, make sure it works. 2022, the first half was still working through that, a lot of the initial development. But at the end of the year, there was approximately 350 million in AUM. So, the majority of that came in the back half of the year. So we have a nice trend going, and to some of you, they may sound like a lot of money. Some might sound like, a small, but it's a very good start for the platform. Have a high confidence that, through this year that we're going to end, $1.4 billion plus. And what is very notable is in this short period of time, if you look at the tombstones, we've been able to get some significant, recognition in the industry. WealthTech 100 company, even though early stage company last year, America's Best TAMPs, and we got it again in 22. That's generally about the top 100 firms or thereabouts. And then 2021, when the Robo was actually, able to take money and launched, one, outstanding achievement in that space. So very significant and validates, the initial path and where we're going with the business. So the Tactive team, see a lot of pretty faces other than mine. You guys can throw darts at this later if you'd like, but Joe Gissy is the founder. Rick Dwyer's been on since the beginning. Chief Operating Officer, wears a lot of different hats, a lot of projects, specialty things. What I would say, Joe and Rick both are advisors, have been advisors, have a background. I gave you my background. I'm chairman of the holding group and work across, all the different, potential products and services that we're looking to integrate with or develop internally. But we have a perspective, I think, that is different than most, in that a lot of people can build tech companies and they have tech expertise. Being practitioners and combining that with the expertise on how to build a tech-based company is much different, because there's a lot of platforms, and I showed you that kind of industry horizon. You can pick and choose. Everything sounds good when you're reviewing it, and then you actually have to make it work. It has to be seamless and efficient. That is a whole different perspective. And so having that background, understanding, working with advisors for over 30 years, we can actually make a difference and concentrate the development dollars and resources to do things that are innovative and actually work, are able to be used efficiently. Brad Nielsen is our CTO, has a very strong background on large enterprise deployment, and is in charge of our build out and operating the entire tech landscape, which is a large job. So the rest of the people here are either staff, and then the last row, all very important. So I don't mean to skip over that for briefly, but to give everybody's backgrounds, I'd use up the whole hour. The last group are advisors that are currently on the platform. I actually, those are what's called IARs, where they're representatives of Tactive, and we provide all the compliance and oversight for. We have another group of RIAs and others that are affiliate with us differently. I think there's a total of 13 practices that make up that $350 million or thereabouts. Core values.
So Jim, just real quick, for the record, Joe also, and you may have said this, but I just want to be clear, ran an advisory business, and so did his father, right? So this is not like some tech guy deciding that he was going to try to fix the registered investment advisors' problems without having lived the horror of them, right?
Yeah, so if I wasn't clear, when I said Joe and Rick were both advisors, and myself. So, and then if you go down to the next line, Tom Vick recently joined us in business development. They run an RIA, been in the industry for years, so is Giovanni. So those are employee representatives, but we have a strong background and experience level with actually being advisors and working with clients.
Got it, thanks.
Yeah, sure. So core values, there is a lot of companies that have mission statements and core values, and it's kind of, in a deck, right? And don't live it. The interesting thing about Tactive, and something I didn't know until joined, is they operate on something called EOS. And you can go into that, and it's a very robust form of managing a company. Entrepreneurial operating systems, what it stands for, and processes that keep you online and keep the team working efficiently towards and focused, right? Because in a startup, and as many as I've done, you could be the squirrel chasing, in the backyard, chasing everything that's on the ground, and never get anything done. And so that system really is integrated, and part of that is core values. So being a financial services platform and entity, highly regulated industry, fiduciary responsibility has to be the base of what you do, and we're very cognizant of that. Intelligent performance, that can mean a lot of things, but on the asset management side, if you believe in modern portfolio theory and think that's the best way to design portfolios and build it out, that's great. That's where most of the people are. We think we can do something much more robust, and people that are of my age and arts, we've seen different markets in the 80s than what most people live through, and think there's probably something that's going to change going forward. Active investing, I think, will come back in a robust way here, in this next market, we'll call it regime. That's on the really what this is kind of geared towards, though, is how we operate in an intelligent and we perform in a manner that's thoughtful. Relentlessly driven. It gave you my background, Joe. One of the things we synced up, and Rick, right out of the gate, were being entrepreneurs. You operate differently than you do in a big company. And the times I've spent in big companies, I was pretty much chomping at the bit to get out of it. So, it's not unusual for us to be taking calls at 7, 8 o'clock at night over the weekends, things of that. But really, beyond work ethic, what we're trying to do, there's an overused saying, I think that's, I'll probably just get one segment of it right, but pursuit of perfection is impossible, but pursuit of excellence is something that's attainable. And so we're driven towards that. And in this day and age, adaptive and collaborative way, as we build this out, will involve the advisors that join us in a very collaborative way and help us on product development, usability, creative ideas, how we can help them solve problems, as well as the internal, staffing. We'll have, we meet actually as a group every week and bring things up and talk about that as part of our EOS. And if we're doing all those things, you never get to a point where you're at stasis. You've got to continuously improve, or there's a new company launched every day, as I mentioned earlier. They could be climbing up your back. So core values guide this company. The other part of what I believe, especially in an early stage company, is you'd like to have optionality in anything that you do. And that doesn't mean you go from one thing to the other. But if you look at our revenue streams, this business model is extremely robust. And it's part of it is because of the various ways that we can derive revenue. So if you're familiar with, TAMP as a platform, most people join a TAMP and they're going to pay some form of a platform fee. And other services may, come under that, but essentially it's the servicing aspect of our business. On assets under management, as products we create, we can generate a fee from AUM as a product manufacturer, but also there generally is some fee for AUM, and that's tied into the TAMP services model. But there are service fees and asset under management fees. Tactive Wealth Advisors, again, as they grow and we bring more of them on, we'll generate fees from their growth of their business as well. So you get that product or that platform extension. What is really interesting in that, and it's the first platform I mean, Foley had an online broker dealer, but it wasn't considered in those days. Maybe reconsider it now, but as a robo. But the TAMP aspect and tying a retail advisory client base to a TAMP, that's another form of revenue stream, but it's a differentiator in the market, and it's a significant differentiator, and will drive the acquisition of retail clients, but purposely drive them so that at some point in that investing cycle for them, whether it's a life event or a question or problem, they generally are going to seek advice. And through our network of advisors, we'll be able to match those retail clients with our advisor network and help them actually as a source of growth for the advisor. White label, we have the front end robo piece that can be white labeled, and so there are other applications and entities that would like to have our ability there, and we're in pretty far down the road on what could be done there, and actually have potential clients for that. The other part I'll speak about later is the alt marketplace that we're endeavoring to build. That also could be unbolted essentially from our platform on a SaaS basis and delivered to higher end RIAs, family offices, other networks like that. So that alt product development and distribution, again, I'll get into more of what that is, but there's a lot of work in this space that's being done. Some of it is efficient and usable, and others are not. We're going to have a highly curated platform that's automated, and again, I'll talk more about that. Some of those products that we bring onto that marketplace, we could also distribute it within a network, but also outside of our network. And I think that's a really strong opportunity for us. Insurance and banking, what I would say there is, that will be, people that entities that we partner with. And in both instances, it will be start with the consumer type products and also build out the commercial side as well. And in today's world, an advisor needs all of that to be as effective as possible. They all have clients that need insurance. They all have clients that have banking, whether it's retail banking, facilities, lending, and things of that nature, or more on a investment banking for that matter. Clients that they have need to be able to access all of that. And so when we talk about an integrated platform, we're talking about integrating this entire group of services and products. So, if you look at this constellation, there's a lot of names, and some people will recognize them. What I would say is, to my knowledge today, there is nobody that is doing that entire lineup that is presented here. And, this is a huge market opportunity. And there's some consolidation since we've done this actually of a couple of these firms. So, we believe that we can, with everything that we're doing, we certainly can be in that mix. And, $35 billion, like I said, we got Cure into 24. So that may sound like a lot of money, and it is, but it's something that's attainable. So who uses TAMPs? What I'd say here is what's more important is how big the marketplace is, over $2 trillion. And that's RIAs, IBDs, independent broker dealers, bank and trust departments, family offices, smaller slice, but a lot of AUM represented there. And then, Wirehouse and various other organizations. So again, the issue is there's a lot out there, and there are segments of this that are ripe for disruption.
Hey, Jim.
Yeah.
It might be a good time to, one would think that the opportunity for bringing people onto the platform is somewhat driven by a trend that may or may not still be, I just don't know, may or may not still exist, whereas financial advisors, registered investment advisors, at some point in their career tend to go away from the large institutional banks and that sort of thing. Is that trend still happening.
Yes.
And one of the reasons why you'll be able to attract people to the platform.
Well, so there are a number of different trends. Technology in every aspect is disrupting, whether it's independent broker-dealer market, the wirehouse market, independent RIAs. What I can tell you is, the trend is still continuing, and strong trend for people leaving. When we say wirehouse, it's typically, people, Merrill Lynch, UBS, Morgan Stanley, those large bank that have broker-dealer operations. The pandemic actually, was very disruptive in this space as well. And yet to see the entire fallout, but what's important here, and when we talk about optionality, that integrated service platform, we are looking for independent advisor representatives that may be independent now and just like our platform better, that will affiliate with us. We have one person now that's a W2 employee advisor, which is the model that you'd have, at Merrill, UBS, Morgan Stanley. And so we can bring that grouping over. We can attract RIAs to the platform, and we have several already that are affiliated with us. And we have the retail, the robo side of the business. So product depth, which I went through, that there's different streams of potential income. We will have all that, and we are wider as far as the various channels when you go from, robo to W2 employee than any other platform that I'm familiar with. So even if the trend weakens in one area, we're able to go across that entire landscape.
And that's important to an investor. But
Absolutely.
I think that what is interesting is there's some build out yet to be done. And this is part of the reason for the raise and use of funds from a tech perspective. And
Majority
even
of that.
though you've been able to attract people without the full suite of everything that you're likely to have ready in a year, right?
Well, yeah, I'll get to that, but to have $350 million and have, basically the robo ready, it's not what I'd call officially launched, and a back office servicing entity that's, built out, and some interesting things that we're doing, but not anywhere based on what I described. Yeah, so the majority of the money that we're looking to raise will be deployed for technology and then employees to help actually run the business and acquire the new advisors.
Got it.
Okay. So I'm going to go, I'll make one note here and do this pretty quickly, but, why do advisors use TAMPs? A lot of people, initially would think, well, because of the investment, management capacity that you have, and that's second. I would tell you that I think in actual usage, for people making decisions to leave where they are and go, it's important, but it's not at the top of the list. And in my experience, it would be more third or fourth, because most platforms have, if you're a Schwab or Fidelity or multi-custodial, you have access to pretty much everything that's out there. We're going to do it a little differently. And I think we'll be able to distance ourselves, have all that available and then some. And I'll get into that here in a little bit. But really what's, service, operations, are extremely important. But every advisor I've ever met, has a question, and they'll say, how can you help me grow? And that's either, grow the practice in the sense of bringing on more clients, or grow their wallet, and making their practice more efficient. And so, that really, those two things are generally the top of the list. Everything else, people can check a box and pretty much, get at multiple locations. We'll do a lot more than that. So when you get into what are value propositions and what differentiates us, and from an investment point, this is really important. So I'll describe each one of these: true partner for growth. Again, a slogan that a lot of people say, oh, we can really help you grow. And then if you dig in and say, how are you doing that? It's generally marketing material or affiliating with some kind of brand identity, but it's not really kind of in the weeds with what we want to be able to do and are beginning to do now. Technology is a a great equalizer, but it's also, something that, again, deployed appropriately and smartly can make a big difference. We've already done some of that and looking to do a lot more. The product suite, as I said, a lot of people have supermarkets, but being able to make it and actually different and a differentiating point, there's a lot of real practical experience and technology application to go into that. So let me dive into some of the important aspects. So true partner for growth. Look, you can get to economics, and anybody can at some point can go in and lose money and underprice you, or you make it a race to the bottom and acquire clients that way. So we never want to be in that kind of a race. But from a payout percentage, because of our efficient operations, new technology deployment, and so forth, we can be extremely competitive on the payout percentage. And then there are some segments like the W2 employee, we think we can make a major differential. And again, I could talk offline with what that looks like and how that's built out, but there's a lot of room in that space, and think that W2 channel can be pretty significant for us. Equity participation, we build out a plan where every advisor coming in will have the option of having equity in the company and or a cash retention deferral program. So love people to come in on the equity side, be part of the culture, buy into everything we're doing, and operate as part of the group. If somebody is a little hesitant to do that, but they'd like some economic benefit, then we've engineered a cash deferral program and the ability for them to actually have a free look for a short period of time and then convert that to equity if they're comfortable. I think that will be a major impetus for people to come on board and consider us. Bonus potential. Essentially, if somebody comes on board and they have a 15% CAGR, we'll bonus the payout percentage to them. So we help them grow, and I'll talk about this recruiting model. They could actually get their bonus potential by just doing the things that we're going to help them with. So that is I think will be very attractive. The recruiting model, this is interesting, and it's learned experience. You hopefully are able to apply that going forward. This is something that I'm pretty excited about, but I've always believed that if you have a satisfied client as an advisor, in this case, come on board, we want to incentivize them to be able to help us grow. Right, we're going to help them grow. This is an opportunity for them to help us grow and participate. So if they recruit or help us actively recruit another advisor to the platform, we'll give them an override on that business. I know there are a lot of people that are in this space that are, in their 50s. Really, they don't want to have to deal with, still recruiting clients on a regular basis. But they know, and maybe part of study groups or whatever, that they would like to attract onto the platform, and we're going to help them do that. So there are multiple ways for us to help them grow. On a more tactical level, most advisors, they've worked through some model to get the success that they've achieved in how they bring on clients. What most advisors are not good at or don't have the resources to do digital marketing. And so part of our platform is to build this for them as a base service. And if they want to customize it, we'll have various levels where they can pay for more. But to take this task on, so we're providing that digital marketing strategy for them, will be, I think, a significant way to help them grow. And, beyond, the like SEO or deployment, what we're looking at is, an education process, content, and deploying that on various digital platforms so that we can drive clients to them with, again, smart content and a process that we're taking that burden from them. So there's a lot on this I could go through in detail, but again, that's a differentiator. There are not, and it can be scalable. We can do it from a home office, again, at a base level, and run multiple campaigns for each advisor, throughout the year, again, to drive clients and do it in a manner that is synergistic with, their ethos and practices and what they do. So now we start getting into some of the innovation that we're going to bring to the table. One of the frustrations that a lot of advisors have, even if they're working with TAMPs currently, is being able to see a full picture of their business and being able to track that. So we've deployed our first first phase of what this workstation is going to be, and we'll add as we are able to enhance it. But essentially, every advisor would love to have one dashboard where they can see a picture of their business. So clients in transition, meetings coming up, marketing dollars spent, return on investment. So developing that kind of KPI dashboard and then be able to drill off that into the various parts of their business. That already, like I said, is we've got that picture, and we're going to be adding those type of enhancements. So if I'm running a business, and even if it's a small RIA where maybe there's 3 or 4 advisors, I know people want to be able to see how productive each one of those advisors are, what's the state of their business, what they've deployed, what they're supposed to be doing, not doing, and what the returns on. And to the point, you can actually roll that up and say, if these are the current valuation metrics, this is an idea of what your business is worth, and show them on one page. So work to be done here, but we've got the foundation built for that already. Now this will be more, our build schedule and some of the things that I'll walk through. So this kind of darker green, these things are built. So the front end robo is built, operational. The advisor workstation I just described to some degree. The next is Tactive 401k. That's actually the area that I started in this business in 1990. So an advisor wants to have a pre-packaged, ready to go 401k with vendor selected and investment options and administration, record keeping, all that built. We already have assets in what's called an MEP, multiple employer pension or plan, and so we're doing a few things in a very short period of time that we'll be able to brand that and have it operational, I'd say, in the next 30 days. It's complete. We just haven't launched it. The white label I described earlier, there'll be 2 phases of that the front end robo piece where, another organization doesn't have the automation for people to go online, open up an account, have it funded, and operate what we now have, and what is significantly different. Most platforms that have done that, the big Wealthfront, Betterment, and so forth, it's ETFs, mutual funds, and maybe a smattering of some other things, but that's basically what they're doing. We've got institutional money managers that are actively trading in strategies that are generally tactical, kind of a basis to it, and we're trading those in a way that allows for a client to come on, or an outside investor to come on with very small minimums, and that is a significant undertaking, and that's up and like I said, running already. That's what we're talking about in this number 4. The reason why it's a different shade of green is because it's not finished, but it's substantially complete. And we'll be able to port that to other organizations that would like to have that front end, retail client acquisition part of their business. Strategy marketplace I referenced earlier, but think of institutional money managers that are an undiscovered or emerging managers, and that'll be primarily the case. There may be some that are established that we'd like to have on board, but in general, when an advisor comes on, before they go to the custodian, they go to a strategy marketplace and be able to see interesting managers that will work with us and help them understand their strategies on a more boutique level. We're in the process of building that out. The managers that are currently on the front end robo piece will be in that marketplace, and it won't be a supermarket, but it'll be a market where there'll be some diversity in the types of strategies and focus, but primarily emerging boutique type managers. Firm believer, emerging managers, if you're able to take the risk management piece out of the equation, so get comfortable with that, whether it's capacity constrained or they're just, more focused because they are smaller, able to deploy capital more flexible, generally have a better return profile than larger organizations, very, very large funds. It's a generalization, but we're looking for those unique stories, unique type of managers that want to be part of this boutique culture. The alt marketplace, what I would say is, and this will be a highly curated strategies, hedge funds, venture, private equity, and some direct investments that bubble up over time. And again, there are people that do this day to day. We did this for the family office that I was running, or part of the team that was running it, and did it very successfully. There's a place here for, again, if you look at that emerging type manager, they're not going to make it onto the big supermarkets generally because they're not raising enough money that it's interesting across a big platform. Because if there's capacity constraints, the time that they do the diligence, onboard it, negotiate all that, integrate it onto their platform, if they're only raising 30, 40, 50 million, $100 million even, it doesn't do them, the big platforms, justice, in the sense that that profile, they've got to have something that goes across their universe of advisors. We think there's a real opportunity to get very smart investment onto the platform that fit that profile. But the real interesting part of this is that there's a significant opportunity. There are firms that are doing front-end automation now. So if you think of one client having one subscription document that you can apply across multiple structures, whether it's a hedge fund or a private equity, we're gathering that data now. And so we can build out that subscription, form and process to populate any ones that we need to, automate that, make it much easier for people to use. But what we really need to be able to do is do the full life cycle. So if it's private equity, track, amount that's been invested, what the commitment levels are, any other the private funds, K1s, an alert system. So if a strategy has a profile, something changes, there's a disruption in the portfolio management team, whatever it might be, to be able to seamlessly let the advisor know so they can inform their clients. That entire structure will be automated. We've gone through pretty significant vendor selection process. We're nearing the end of that to build this for us. The real interesting part of this, though, is if in the structure, we can make this so that we can lower the minimums so that an advisor can be able to use it across the majority of their client base. So if you think about what we're solving for here, is most advisors don't have the knowledge to be able to effectively use alts. And if we curate the platform, work with them, and build strategies, so we will build strategies that fit models. So multiple funds or independent strategies collectively into one strategy that they can use, and they don't have to do that diligence, or they could bring them, one at a time down across their client base. So the knowledge gap, we can help, bridge that. Then ease of use. So if we automate those processes that we talked about, it'll make it easier to use, but usability is a different issue. Most advisors don't have large enough clients as far as their AUM to be able to invest across multiple private structures and continually be in that space. So if we can lower the minimums to a reasonable amount, it's not only user friendly, but it's now usable across their client base. And that's the goal of building out the alt marketplace. The data lake, Brad, I've talked about this a couple different times, but in my mind, when I developed, technology businesses, it was a data warehouse. Data lake apparently is somewhat a little bit different. I'll let him describe the difference if anybody has a question on that. But essentially, we have a huge storage of data that comes over from the advisor when we bring them onto the platform of all their client. And we have think of it as a utility, but a structure that we can make that data useful to make the application process for everything that we're doing much more seamless and usable across all the different types of products. So when we get into life, annuities, life insurance products, banking, all that. There's some application, mortgages, that we now have all that information. We can pre-populate that and make it very easy for people to do business with us. Advisor analytics, talked a little bit about that in the workstation, but again, there are not very many platforms that bring that to life. So, part of that will be the digital marketing, how effective it is. Part of it is their practices, what they're doing, in their individual practices and how they're doing it. And then some market, comps. So think of it from again, a business owner standpoint, what you'd like to have there. I've talked generally about the marketplace, insurance marketplace, banking products. Again, I think that's somewhat self-explanatory. We won't, build those products. We'll integrate with providers that have that ability and would like to have the distribution capabilities that we're bringing to the table. Okay. So, when you think of who's out there and you try to benchmark, the companies on the left, Facet, Vice, Savvy, Farther, are all companies that are doing aspects of what I've just described and what we are doing. None of the companies I started are working across the advisor channels that we talked about: retail, W2, IAR, RIA. And as far as the entire marketplace of products and services, they're all doing little parts of this. Facet primarily, are looking to bring retail client base and connecting with CFPs in their network. So think of that advisors. We're doing that now. We have the robo and we have the connectivity that we can drive traffic to the advisor. Vice, AI-driven portfolio management, and it basically allows the advisor to use those strategies. We've got AI firms now that would like to come on board as options in our marketplace. We haven't gone through and completely vetted all that yet, but that's not anything that's that significant. I'm sure there are things that each one of these companies are doing that are, smart, thoughtful, and innovative. And I don't have access to all of it, but what I would say is the basic principles of what they're doing, we have that capability to do and plan on doing it and more. Savvy, again, I talked about digital marketing early, essentially that's what they're doing for their client base. Okay. Farther, interesting, because basically they're saying they're going to take alt strategies and make them, available to the advisor, market. They've got 4 employees, 143 million in AUM. I think that was a relatives RIA that they're going to use as, to build off the platform, but it's not built yet. They've just announced recently that they're going to build it. These other companies are up and operational. What I wanted to do here, we wanted to do is show, how much they've actually raised, each one of these companies, to the extent that we could. Like Facet, we had to estimate the valuation and then show from an AUM, because almost all these companies at some point will be valued based on, actually how they perform in general, but AUM is the driving force behind it and where they are. Now, if you look at what we're doing, we talked about the WealthTech platform. That's the robo piece, the advisor workstation, having a qualified plan offering, being able to white label various aspects of the business, SaaS, for the front end, the robo piece, as well as the alt marketplace, building the strategy marketplace where, again, generally these competitors don't, and the industry doesn't do that as well. The data lake, that in and of itself, just the warehousing of all that data, not only is it extremely useful, but it's, a valuable piece of the build out. And you go through then and the leverage that we get by providing, the various products that we're not a product manufacturer of, but enriches the advisor experience in the way they can serve their clients. Each one of those, again, is a revenue stream, but it's an extension of the platform. So you're getting leverage out of the technology platform into all these different markets. We currently have 8 in-house employees and 15 financial professionals on the platform. We are already servicing retail, W2, IAR, and RIA, as I explained earlier. And then, from an AUM standpoint, we've only raised $1.8 million to date, and already have 350 million in assets on the platform, and a pipeline that's, significantly larger than that. So, just based on that comp alone, I think, we have an extremely exciting and valuable proposition. this is just demonstrates, differently in a visual aspect. You can see where we are Tactive and, what we've raised, to date and where we are in AUM. So I know we're running short in time, so I'm going to go through this somewhat quickly, but cumulative funding and then, where they are. So if you want to look at efficient use of funding, we've gone a lot further than these firms that have had significantly more. Fast at 158. So you can just go through this, do your own research. But from comps, those are people that are just touching pieces of what we're doing. We're doing all of what they have, and we've surpassed all but Facet in AUM growth and only less than $2 million in funding. Now, again, I mentioned where we could get information exactly where their valuation, what their dilution looked like, how many rounds they've done. And farther being, brand new and actually not operating, $50 million valuation. Okay.
So I have a question.
Yep.
I think it's pretty clear that the advantages, what the advantages are, and that there are clear advantages for the advisor. As an investor in this, what you've just demonstrated is that the valuations and comps are there. What can you say about the companies like Wealthfront, Betterment, that sort of thing?
Yeah,
who have monetized, and what without predicting what's going to happen, what do you think the outcome's going to be here for Tactive?
Yeah, so I would say, we are doing some things that obviously have a robo. It's a different business model. They're trying to back into what we're doing on the advisor side now, but they started as a pure robo. The acquisition cost of a client is huge in that space, and that's what this is designed to show. So we don't want to be a direct competitor with Wealthfront and Betterment as a standalone, right? And if you just look at this information right here, total funding amount, AUM size, it's an expensive proposition. Most of that is marketing costs, right? So think of it from the client acquisition. Very, very expensive to do. When you look at just B2B TAMPs, AssetMark, I actually, when I was at the family office, we bought a $6 billion TAMP, 2016, 2018, we sold it to AssetMark. Frankly, we bought it for around 6.7 EBITDA because it needed a lot of work. They had some really good things about it, but it actually, had the underpinnings of the operational infrastructure and the investment structure had to be basically redone. We sold it a little over 2 years later at 14.4. Okay. But, very good company, a lot of really smart people, but they're going out basically with the investment offering platform and on the piece that they actually do, they'll do the reporting and for them, kind of that back office. But a lot of clients that use an AssetMark, a lot of advisors, they may use that for like a third of their business and use other things, where in our world, most people are coming over and using the entirety of our platform service and offering. So it's a little different. Investnet, you think they're the biggest, think of it as plumbing. Today we could connect our back office operations and use Investnet as a platform. In fact, the one I just described that we sold, we ripped out all the infrastructure and put it in Investnet. So, but they've done extremely well, have grown the business, but they're more of a back office technology provider than a TAMP service provider. Okay, so we sit in between this. We'll use an Investnet, and we have the robo aspects. And again, we've only raised $1.8 million, have 350, about 700 clients today. Our account size is bigger, so from that standpoint, it's much more profitable than a Wealthfront or Betterment as far as a business model. Okay.
So is it fair to ask, and you don't have to answer it,
sure,
based on the preponderance of the AUM you have now representing your revenue stream, is it X amount of revenue per $1 million, or to have 10 million? Is it fair to sort of connect that number?
To some degree, and the correlation is strong, Art, but as we build this platform out, for example, on the alternative side, if we build a master feeder structure where we're actually the GP and we do it on a series basis, we'll be able to bring strategies on where, that series becomes a feeder, into where we're investing in other strategies. Think of it that way, right? In that case, we actually will be a product manufacturer, right? And be able to take GP level type, we're not going to take 2 to 20, right? But we will have beyond platform fees and production type fees that can be generated. We can actually take manufacturing dollars, and then the lending, banking, again, is virtually 100% accretive to our bottom line, because we're going to take a scrape, right, from those products and services. On the insurance side, that can be a significant override, right? So there is a direct correlation to AUM, but when you extend the products and the platform as I've described, there'll be revenue sources that aren't directly tied to AUM, and that is stuff that, again, there's some technology built out and some servicing aspect, but it's not a service platform operational endeavor, and much higher margins for that part of the business than just the platform AUM fees.
Got it. So we are going to run out of time. So let's just talk about the raise, use of funds, that sort of thing. Yeah.
So, we're in this round looking to raise another 2 million. And you could talk me into probably taking more, but that's the next piece of it. And that slide, that I had this here. So use of funds, to be fair, $2 million isn't going to build all of that, right? So we'll have to be smart at how we deploy it. But as we are deploying this and growing the advisors that are joining our use of cash from a capital raise will be less and less, because we can fund some of this from an operational basis. And this is actually in the order that we, today, that we're looking to develop. Now, what I would say is, if we have a strategic come in and want to fund us more generously, we could reprioritize this, but in basis, the majority of the use of funds is going to be tech deployment. And then there are a couple key personnel that we'd like to hire in conjunction with this. So key people and technology.
And what do the current investors look like?
Employees, the friends and family kind of type, people that have close connection to, someone in the company, and there are a few investors that are in companies that are related working with us currently.
Yeah, good.
Okay.
So super interesting. I didn't realize that you had, I know I'd said at the beginning that you have a lot of AUM, but I didn't realize that it happened that quickly, and only with that many, and 270 average, right? So
yeah, and actually, as we're completing the deployment of this technology, it's going to allow us to go after, in different ways, larger and larger organizations. So I think we'll actually get improvement on that. We're if bringing on larger advisors, larger client base, and more AUM on on each acquisition of an advisor. So today it's 50 million. We certainly, we're talking to an RA now that's 2 of them that are 250 million plus, right? That I can't tell you they're going to join in 30 days or 60 days, but we're in those discussions on an active basis. So we have a pipeline, and pipeline's growing. And Tom Vick, who just joined us, beginning of the year, is already have what I'd say substantive discussions. Then Joe, myself, Rick, other people in the company are, connected into this space pretty strongly as well.
Yeah, and then finally, what are you going to do, if anything, as it relates to crypto and all that business?
Yeah, so on our front end right now, it's one of the unique differentiators. If somebody elects to have that as part of the strategy offering, we can deliver that today. In the alt marketplace, that's not going to be, we're not building an exchange for crypto, right? But there are strategies and structures that in our diligence, we'll find. I can't say what they are today, but they'll be part of the offering. Yeah.
Yeah, perfect. That was awesome.
Okay, well, great. I know, we're at our ending period, but if there are any wrap-up questions that you saw, I'm happy to answer them, quickly if people wanted to stay on or you did.
Yeah, I know that we're going to make sure that people can connect directly and ask whatever they want. And of course, the objective of all this is to get some people into this round. So I will say to the group, not only thanks for being here, but if there's anybody in your world that would benefit from participating in this as an investor, and furthermore, if it's okay with you, Jim, if there are advisors out there that you think would be intrigued by having a conversation with Tactive and Jim and Joe and so forth, that certainly welcome, I think, right?
Absolutely.
Yeah.
More than welcome. Yeah, be very much appreciated and something that we're looking forward to. So, from myself and for Tactive, very much appreciate the audience, and hopefully you'll find this exciting as we do, and look to be an investor. So, thank you.
Thank you. And as I always say, folks, thank you for sharing with us the only thing you can't make more of, and that's your time. Until next time. Thank you. Thank you, Jim.
Okay. All right. Appreciate it.